Hi guys, and welcome back to the channel. About a year ago now, when I was still fairly new to YouTube, I did a review video of Vanguard's S&P 500 ETF. I looked at the fees, looking at some of the companies that it included, and looking at its development over the last 10 years. I think now it's time to update this review because companies like Tesla weren't included in the S&P 500 at the time I conducted my initial review. Essentially, the S&P 500 is an index that holds the largest 500 companies in America by market capitalization. So this includes some of the really big boys from the American market, so Amazon, Tesla, Apple, and anybody else that you've probably got within your own portfolio. The S&P 500 is often used as the benchmark and gold standard by which to compare the progress of individual portfolios against, with it netting on average 7.4% per year in capital growth. Its rise to fame has been accelerated by people like Warren Buffett, one of the godfathers of investing, who said that 90% of any of the money he left his wife after he does die should be put into an S&P 500 ETF or tracker. There are now loads of ETFs that you can invest in the S&P 500 through, and some of the favourites are Vanguard's ETF, the iShares ETF, as well as the Invesco ETF, which all track the same underlying indice. Today then we're going to have a look at the Vanguard S&P 500 ETF. We're going to have a look at the fees, the distributions, what companies are currently held within the product, and how much one unit of the fund has increased since my previous video about a year ago. Let's hop straight in then to Vanguard and check it out. From the overview screen, you can get a lot of important information. You can see that the value of one unit of the fund is currently £67.16, and that's up from £46.41 in my previous video. So that is up over £20 since I filmed that last video about a year ago, which shows the value of buying and holding, especially in ETFs for long-term investment. Despite this being an S&P 500 tracker, it does hold 509 stocks in the ETF, and this is up from 507 in my previous video. The ETF's ongoing charge is still extremely competitive at just 0.07%, and this is still the lowest ongoing charge for any fund on Vanguard's UK platform. Vanguard's ethos is all about fees and trying to keep them as low as possible, so I really don't see this increasing anytime soon. If anything, I think we could see a slight decrease in the future. The risk rating for this ETF still sits at 5 out of 7 in Vanguard's risk continuum, and again this hasn't changed at all since the previous video. Now, by scrolling around on this first overview page, we can see lots and lots of other information. So we can look at the past performance, and all of this is kind of yearish to date, so it goes from the end of last month to a year ago as well. So you can see each of these different date lines along the bottom, and you can see that over the last 5 years it has been in a positive rate of return every single year. Over the last year, from kind of the end of last month, we're up 27.5%. So we've got two numbers here. We've got the NAV, which stands for the net asset value, which is here in grey, which is the actual rate of return of the fund itself. The other one we've got is the benchmark, which is obviously a complete track of the S&P 500 itself. And what you'll notice is that year on year, so every single year that's shown here on graph, the NAV, so the net asset value, has increased by a larger percentage than the benchmark S&P 500 itself, which means that this ETF is actually outperforming the index, which means we're actually getting a better rate of return than the S&P 500 itself, which is not to be sniffed at. Over the last 5 years then, we've seen a 22.4%, a 5.86%, a 15.69%, a 17.09%, and a 27.65% rate of return from the asset itself. So this really does show the power of investing in the S&P 500 ETF, especially the Vanguard one, which outperforms the underlying index. We can scroll down even further and have a look at the past performance based on a lump sum investment. So if you were to have invested £10,000 in November of 2016, which is 5 years ago now, that same £10,000 would be worth £22,396, or dollars as it shows on screen here, but pounds would be exactly the same. If we navigate onto the price and performance tab, this will show you a detailed breakdown of the historical prices over time. So it does a kind of timestamp of each day and shows the price at the end of that day. You can also have a look at the price analysis over kind of a current period, so the last week or so. You can change that to 1, 3, 6, 12 or 18 months to give you an understanding of the price movements over time. No matter which one you look at, 18, 12, 6, even 3, it's all moving in a positive direction, which is what we want to see from any investment that we make. We obviously understand that there will be lulls in markets, there will be market pullbacks, but what we like to see is that continual growth over time. If you scroll down even further, past the price performance, we can have a look again at this past performance, but this time over a longer time horizon than the last 5 years. So we can have a look at since inception. So the fund was incepted or started in April 2012. So if you invested £10,000 or $10,000 as it shows on screen at that point, which was about 9-ish years ago, that would now be worth £40,959. So that's a 4x in just under 10 years, something which again is not to be grumbled at. The portfolio data gives you a really detailed breakdown of exactly what you're investing in. We'll scroll down to start with then, and we can see that most of the data here sits exactly the same. So this maps across between the VUSA, so the ETF itself, and the benchmark data, which is something that we really want to see. The region exposure, of course, is 100% to North America, and we can see that the actual market allocation is all to the United States. So Vanguard haven't done any funny business or tweaked the portfolio to include any companies from outside the US. The market allocation is obviously 100% to the United States, which we would expect, and you can see that the weighted exposure is heavily skewed towards information and technology. So if you think about it, you've got companies like Tesla, Alphabet, Nvidia, all of which are massive American companies, and this is why it is skewed in such a way. Something that we can take from this though, again, is that the VUSA maps exactly the percentage allocation as you would see on the benchmark over here. So this is in essence an exact replica of the S&P 500, albeit with 2 or 3 additional companies in there. So if we scroll down even further, we can then have a look at the holding details of the fund itself. And what you will notice if you did catch my previous video is that there are only 2 major changes within the top 10. And that is the rise of Tesla and Nvidia, which have now both joined the top 10, Tesla having joined the S&P 500 itself. And this is at the expense of Johnson & Johnson and VUSA. So both of those two have fallen just outside the top 10 now. If you have a look at the percentage allocation of the funds, you'll notice that around 27 to 27.5% of this ETF is allocated to just 10 companies. So this really is something to bear in mind when you are investing in ETFs. It's always important to fully understand your exposure and therefore your risk when investing. We can have a look through some of the later pages. So if you click next, you'll be able to see that obviously Johnson & Johnson and VUSA have fallen into 12th and 14th respectively. But the percentage allocation of these funds drops off quite quickly. You can see you've got Netflix down here, Walt Disney, Adobe, MasterCard as well. So still some really big names. If we click right through to the final page, so we scroll right down to page 51, you'll be able to see that the companies down here have really no impact on the movement of the portfolio individually. So you've got Under Armour here and Gap, which are both 0.01% of the overall portfolio. So whilst we are catching all of the movements, some movements matter a lot more than others to the overall value of the fund. The distributions then are really interesting. You can see that the S&P 500 or VUSA pays a quarterly dividend at 1.07%. And you can see this dividend over here over time. So you can see over the last year it's been quite consistent at between 20 and 25 cents per share. Now obviously this comes into your portfolio and you can then reinvest that back into the fund to continue snowballing the development and growth of your portfolio. Finally then we'll come across to costs and minimums. As I said, if you are starting to invest on Vanguard for the first time, you've either got to invest £500 as a one-off lump sum investment, which is the route that I took. Alternatively, you can agree to a £100 monthly direct debit, which can be cancelled, I believe, at any time. Once you've made that initial investment, you can then invest as much or as little as you want. Now, the only thing to bear in mind is that on Vanguard, you can't buy fractional shares of the fund. The way you could do that is by investing in the VUSA, this Vanguard S&P 500 ETF, via products and platforms such as Freetrade and Trading 212. Now, I do have links in the description down below, which if you sign up to either of those platforms, you will get a free share valued worth up to £200 on Freetrade when you invest £2, and £100 on Trading 212 when you invest just £1. Now, of course, Trading 212 for some reason are still not taking on new clients, so Freetrade is definitely the way to go at the moment. So there we have Vanguard's S&P 500. As I said, this is the central fund in my portfolio, and I think this is the fund that most people, most investors, especially long-term investors, have as a central element to their portfolio in some way, shape or form. As always, I really do hope you've enjoyed this video, but please do let me know in the comments below if you invest in the S&P 500, the Vanguard, the Invesco or the iShares or any other iteration of the ETF. Or do you prefer to invest in individual stocks and shares, and do you hold some of these companies which are sat in the S&P 500 in individual company form? Please do let me know, because I'll be really interested to see what you guys are up to as well. I've also got a link down in the description to Profit Accumulator, the software that I've been using to make money every single month via bookmaker offers, completely risk-free, so check that out if you need a bit of extra cash in your life to pay for upcoming Christmas. If you have liked this video, please do drop a thumbs up and subscribe to the channel if you haven't done so already. And with that said, I'll catch you in the next one.